straight into the CME because we got a very energetic bull who's been standing by and who said the rate cut was coming. Alan Nuckman, you nailed it on the 50 basis points emergency move.
Right.
But the markets don't like it. So is it time to just give up? I mean, this market can't even get a bounce after emergency cut. What's the deal?
I didn't say the market was going to like it. I said it was going to happen. So the mixed reaction obviously shows that there's still other concerns out there. But let's talk about there's an 80%, or coming in today, there was an 85% chance of another half-point cut by the March meeting. So that would bring us down to a 0.5%. Then if we go further out, there was a 35% chance that we're going to be at zero target rate by December. So that equation, we've talked about that as a stimulus. These look like a done deal. So the question is, what next can they do to stimulate the economy? That's really more psychological than anything else. That's not gonna stop. That's not gonna help the stock market. I mean, rates are extremely low. Bringing them from 1% down to zero is not. I don't know how much that helps, but you got to understand. That's one of the levers. The other lever is the destruction of the dollar, and that has started.
Yeah. So, Alan, when you look at this, the market's not taking the cues from things it used to in the past. Are you still looking for upside moves in this market? I know that this has been a big rally that then turned around into a big sell-off. But, look, we're testing the intraday lows, right? We're not exactly totally falling apart.
Do you know we're actually positive on the week if you look at the Dow? Now, the Dow is not a good barometer. It's only 30 stocks.
Sure.
Let's see where we are in the next 15, 20 minutes. Let's remember what happened last week, last Friday, the last 15 minutes of the day. The S&P made a 100-point turnaround. Now, that was when Fed chairman said that, he was going to do something, and he did, obviously. So, let's see where we finish. But let's remember that, how shall we say politely, the personal interests of people when it comes to this market. So don't be surprised if there's something said or done to stimulate the market anytime, anyway, anyhow.
Right.
And to fight that is a force to reckon with.
So do you still feel bullish? Because you were this way at the start of the year. You nailed the big melt-up rally, Alan. But now it's like, where do you go? Because we're stuck down 12% or whatever. Are you worried that maybe we don't recover from this, that this is finally the trend change?
I like the way the market behaved this week. We had a step forward, then we'd have a 3/4 of a step back, and a step forward and 3/4 of a step back. Let's see where we finish today. But we're building on that turnaround that we saw last Friday. That's what's important. If we took out those lows here just a little bit ago, you can build on this and have a little rally run in this last half hour. We'll have to see how we close. But that's going to be, a determinative of, kind of the strength and the stability we have. We had a lot of signs of stability last Friday. We built on it Monday, and then we've had some bumps in the road. Now, you were talking with JJ about China. China, I think, is a good example of, they've already kind of weathered their storm financially, and some of their stock indexes were at 2-year highs here in the last couple of days. So, they talked about Starbucks and McDonald's coming back online and so forth, and all these other factors. So I think we can see a similar fashion here in the U.S. as the markets kind of, embrace the reality of the situation. And it is what it is. The fundamentals, are the U.S. corporations are still making money. Yes, they've been knocked down as far as their expectations,
right?
But that's also knocked down the PE ratio, made stocks cheaper. We're back to levels we were in August. We're simply now back in that sideways range where we were between 2,800 and 3,000 for 7 months last summer. And now let's see what the next move is. But, you have to see how we close. Like I said today, we're not that far alpha unchanged on the week when it comes to, when it comes to the S&P, when it comes to the NASDAQ, we're within striking distance. Let's see what happens in the next few minutes. But I think the dollar is the story that we're not paying attention to. That we're
in terms of what?
Almost 500 points.
Is stocks positive, the dollar dropping?
Yeah, I mean, that's the next lever of stimulus. They talked about it, and everybody, said, no, that's not possible. That you're not going to see the U.S. destroy the dollar. But, like I said, that's another lever of stimulus. They only have so many arms to pull. And we've seen the dollar, which was at 1-year highs just a few days ago, now at down here at 3-year lows. I'm
Right.
sorry, it was at 3-year highs. Now we're at 1-year lows. So that can boost the markets. And
But Alan,
Mr.
that's
Trump has said
presuming
over and over again the dollar's too
is
strong.
like a stimulative effect. If I take the other side of it and say the dollar is a resultant of a certain set of parameters, which has been the U.S. economy, the best house on the block, low rates that cause a TINA trade, that even though ours are low,
Right.
stocks love it, all the money still comes here anyway. People are making the argument right now that all just ended because the U.S. economy is going to grind to a halt, and then all of a sudden that TINA trade, doesn't matter how low yields are, doesn't matter how low dollar is, market's finally going to turn around.
That's very presumptive. Let's look at the facts. The facts are they wanted zero interest rates, right? Fact is that they wanted to pump up the money through QE and QE3, I guess this is, through the deal. All right. The other lever is they want the dollar lower. Numerous times,
Right.
Fed, the politicians have said they wanted to. So now they're getting what they want. The reason they wanted that was because they see that as a stimulus. They're going to do anything and everything to support the market. So don't fight it. There's money to be made. There's big trends. There's big market moves. There's money to be made. Look at the moves we saw in treasuries over the last couple of days. Look at the moves we've seen on gold on a repeated basis and mining companies and metals. There's always opportunity in these markets.
I want to get the logic for it, though, because I don't think it's crazy, by the way, because, again, you could say, look, dollar low, but if nobody's spending, then how can it be consumer stimulative? But I guess you could argue, hey, instead of going on a vacation or something, I'm just going to buy a new TV. I mean, is that the logic here? Are people going to still spend? There'll still be consumer boost from a low dollar? I mean, I don't know. If everybody's stuck at home, I guess it's only Netflix and hazmat suits that get paid.
Right. There's something that's going to go up at all times. In a down market, there's up stocks. In an up market, there's down stocks. So it's just about being disciplined. Let's get into some of the things that I'm looking at using this kind of mentality.
All right, hit me.
Lukin. The coffee. Lukin. There you're talking about China. Lukin's been hovering around this 40 level, and it's dipped down below for whatever reason. But I think you can look at Lukin over the long term. It's been trading in this range between 20 and whatever 50. So I think Lukin is a bit of recovery. Look at JD.com. We've talked about that over and over and over again. It had the same sell-off that we had in America, and then it got bid right back up and made new highs here this week. So I think that's a template to follow, that some of those high-tech Chinese stocks have rebounded, and I look for that to happen. And you can see a similar price pattern in something like AMD. Yep. AMD has traded, and it's got a 45 midpoint, and you can kind of lean on that 45. Let's see what happens here. A nice little push here. You can squeeze a lot of these stocks because there's a lot of upside on these shorts that get squeezed. And you've seen this over and over again until it doesn't happen. I'm trying to look at where the S&P is right now. We're within striking distance of unchanged on the week. If we finish unchanged on the week, are you going to feel better?
All right. I like it. AMD only changed down 60 pips right now. Alan Nuckman, I knew I could get you stirred up on a Friday. Appreciate it as always, sir. He's a chief market strategist.
See you soon.
Core Financial, thank you. We'll be right back. Scott Nation's going to join us on the panel. We're going to talk about a week that, as Alan astutely points out, might just end unchanged. Not too bad, all things considered, especially the fact that COVID-19 continues to add more cases in the United States. Still has fear pushing the 10-year yield down to